Good weekend. Ira Epstein with your metal market wrap-up, your weekend edition where we're going to look at weekly charts for this Saturday, and we're at April 26th, 2025. So this has been a week where we've been getting corrections, not rallies in the gold market. We're no longer talking, can the market keep going to 3,500 where it hit? Can it go to 4,038? Now the question is, where's the support of the market? And for the first time in a while, we've closed back under the 3,300 level in the gold. We'll talk about that in a minute. It's been a very mixed week of up and down action in the stock market. Bonds and notes have been somewhat stable. They've been trading around their 18-week moving average and just hanging right in there. And in the currency market, the dollar had been under pressure and it's stabilizing. That's the only word I can use with it. So before we get into the gold itself, why don't we take a look at any data that we're going to have? And the data we have is from the Dallas Federal Reserve Bank. They're going to update their monthly manufacturing outlook for April at 9:30 in the morning Monday. The last month's report was a negative 16.3. We'll see if they're able to come up and say that the regional manufacturing has picked up at all. As you know, manufacturing has been a hit in the, and I'm talking a negative hit in the U.S. economy. So as we look at the gold market for the month, and this is a area chart of closes for the month. So for the month, you're up 5%. That's stellar performance. You can get corrections, but you're still looking pretty darn good. The month before, you would finish, we should just take a look at it, at 31.22, and that had been up 9.63%. So gold's been on a tear, adding about 20% plus since the first of the year. But you now have the first week, and we can take a look at that, where the market has given you a correction and it closed lower. So this is the first week in a while. In the past, it had come down and then had the spikes up. It's a bit of a reversal from that. 1 week does not make a top. You can see how the market's correcting right through here. And by the way, this chart is the weekly bar chart. This is the swing line that I put on charts. Higher lows, higher highs, bullish. An uptrend is made out of higher lows, higher highs. A downtrend, the reverse, lower high, lower low. No trend has in some manner a higher high, lower low. Where's the support in the market? Well, it's going to jump this week. It's right now the 18-week moving average of closes is 29.28. I say it's going to jump up into the 29.50s when you reopen right off the bat Sunday night. And the reason is you're going to lose one of these days back here, one of these 18, replace it with a much higher close. In fact, the second higher weekly close, and that'll drive that market up about $30. I did some of the work on it before I did this. In terms of momentum, if you close the week with the red line at 79 or under, the odds favor. Price is going to make a run at the 18-week average. So early on this week, the market can afford to back off a little. It's towards the end of the week where it's got to add, because the weekly chart doesn't look at the spikes up and down. It looks at the closing price. Remember that. When you come to the weekly chart of slow stochastics, they're just at the point where they're starting to dip on you a little. If they dip too much and you lose that reading, be careful. You could have much more lower prices coming. Just off a correction, but it can be swift because you've added so many people into the gold market. The gold-silver ratio has begun a near-term pattern, at least, of lower spike highs and lower lows on a closing basis. So that says that the market is in a downtrend in terms of the swing line, but the bias is up as you're still over the 91.45 level. The difference, this would represent how many ounces of silver. You have a great merchant, doesn't want a commission. He looks at spot markets and says, okay, I want 91.45 ounces to give you 1 ounce of silver. Up here, 99.44. So maybe you'll drop back on it. That's all that it's saying, but it gives you an idea which market's stronger at any point in time. Notice how silver is staying over the 18-week average. It is void of a trend. You have a higher high, a lower low. It's been in the past 2 weeks to both the upper Bollinger Band and the lower band. I mean, very dramatic $4 move in there, very hard to catch. And if you're a silver trader, you're either we're in heaven or hell. I don't know which one of the two. In the copper market, you can see how this market has respected the 100-week average of closes. This is very important. On the next pullback, how this market sets up against the 18-week average will be exceptionally important. I'd love to see the market first drop down and then begin to move back up. I want to be bullish copper if the U.S. can reach trade deals with our partners. If we cannot, copper has a bleak future right ahead of it because probably recession in the U.S., and when we get a cold, everybody else at a minimum sneezes real hard, at a minimum. When we look at the platinum, I see a downtrend on the weekly chart. This is the first metal I'm able to say that. Lower highs, lower lows. I think the pros are looking at this market right here at the 969 level as the resistance zone, and let's call it 970. They don't want to see it if they're bearish to get over 1011. And if it breaks and closes under 953, I think they'll get more courage and talk about the $9 level one more time. Last but not least, look how the dollar has fallen and supported metals. Most metals around the world are supported with U.S. pricing. And in that pricing, as the dollar has come down, their currency can buy more metal. And that's added support into all these metals, away from, and I use the word away from, the daily trade talk, their daily economics, and so on. And none of this at this point in time to me looks like a dollar bottom. That's the problem. As much as I keep telling you, I think 99 is an important number because it's a fourth price count. You have an embedded reading, week 1 of embedding, week 2, week 3, week 4. You're 4 weeks into it. The first decent rally probably gets sold pretty hard in the market. That's my point. What it does after that will set up what this market may and may not do. You know, I keep talking to you about Bollinger Bands and the importance of it. And, you know, I've got my enhanced Bollinger Band course. When you take my course, you also get my twice daily market updates. Now, what do I mean by that? In the market updates, what goes on is you're able to see how the Bollinger Bands are working. I teach you how to work with them. We do it, and you get, while you're taking a couple of weeks of the course, my ETF videos, you get my futures videos, and I'm teaching every single day besides you taking the course. And all of a sudden, it starts to fit in. It's a combination of Bollinger Bands and slow stochastics. It's videos. You take them, you get the charting software I use right here in the videos, you get the research behind it, and I try to give you an education on it. Go to iraepstein.com education. You've got the other courses, the outside day course and the full charting course as well. How do you get this? You can either call us or go to iraepstein.com education and take a look at it there. I'm Ira. You have yourself a great day, and I will catch up with you all in my other videos over the weekend and or Monday morning when the markets reopen. Take care.